Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, April 18th, 2018. I'm going to go through just some of the things I've been watching, not all inclusive. There's still some individual updates I wanted to do on certain sectors. I want to update commodities, but that entails a video of itself because there's so many different types of commodities. The marijuana stocks, they had a big move recently, a lot of movement there, so I'll try to get to those in a separate video as soon as possible here. And this video will cover just touch on the broad markets. There's not a whole lot that I haven't updated since yesterday and today. I'll touch on crude and the energy stocks. That is certainly something I think is still setting up for a nice swing trading up. And then I'll hit on gold. We haven't had any changes there yet. And that's pretty much it. We'll wrap it up there. All right, so this is the QQQ daily chart. This I mentioned this in the video yesterday, so I won't spend much time on it. There's a potential, and again, only a potential head and shoulders topping pattern that could be in the works here. You can see the label left shoulder head, right shoulder. This being the preferred neckline. Again, ideally, if that is the neckline, to keep the symmetry intact, you'd want to see a little move up higher on this right shoulder. But there is also an alternative neckline. I didn't share this yesterday. Head and shoulders patterns can have flat, horizontal necklines, or they can be upward or downward sloping. So here's an alternative variation. And if you exclude this brief little spike there, that was what I call a momentum-fueled meltdown or overshoot there. You tend to have you had a lot of velocity coming down there. Prices briefly spiked, but then normalized right around this level here where I have that neckline drawn. So this would be a downward sloping neckline and give a little bit better symmetry to the pattern. What I mean by that, if you had a parallel line there, that left shoulder and the right shoulder, if we started to reverse soon, we could put that in. One of the things I'd like about this, if that were to play out, it would catch a lot of people off guard that are looking for, either they're watching this pattern looking for a little more upside on that right shoulder. And there's also some more my uppermost bounce targets in that area as well. So I'm going to get that. Let's just drill down to the intraday charts here. 60-minute chart. See, this is still my target zone, I call it. Hard to say if all of these levels will be hit. We already hit about the 167 level. And that's also, you can see over here on the left, I have Fibonacci retracement levels from this move down. This is the fib line. So it marks the highs from this most recent move to the lows. If you're not sure what Fibonacci retracements are, just do a quick Google search. Stockcharts.com has a great educational resource in their chart school, and they talk about Fibonacci retracements. But they tend to work. A lot of traders will actually trade exclusively off fibs. I like to incorporate them into my trading. So very often you see retracements run up anywhere from the 50 to the 61.8 level, maybe a little bit higher there. Sometimes there's a 78 point. I think it's 78.6 is the next fib level. I don't have it shown here on this chart. But either way, this rally has now retraced 61.8. So that's a key Fibonacci level, and it also lines up with a horizontal support. This white line you can see just below. I have a dotted line, but I also have a white resistance level here, and it marks a lot of reactions. It marks roughly the top of this gap right here. We had a gap at this point, gap down. We had a reaction from above right there. We had reactions from below right here and a couple reactions there. So that's a resistance level that I still think this rally at least is going to take a little hiccup on. But I cannot rule out more upside. That's why my convictions weren't strong enough to add. I did close out the official long trade yesterday. Personally took a short. I'm going to give it a little room. It's a starter position, but I'm only looking to, at this point in time, come on back and maybe back test this trend line. I had another alternative view of this trend line as well. It comes in like that if you capture these two lows, and that would take us down here to about 162.91 or so. There's that gap, yesterday's gap, to be backfilled. So I covered that today in a post on the front page. And at minimum, I could see a pullback here, maybe a shallow pullback to just backfill the top of the gap right there and then bounce. And that would also bounce us off that yellow trend line as well. So that's what I'm looking for. And where we're at, we're looking at a 60-minute chart right now. I covered this yesterday. looking at these high-level bearish PPO crossovers, we have one right now in conjunction with overbought levels on the RSI. Overbought meaning the RSI is above the 70 level, which is this red line here. So you can see in the past it's done a pretty good job when you get those bearish crossovers of marking tops, or at least periods where you had a minor pullback there in that case. And again, I'm just going above these circles and showing you where we're at. So that's that. That still supports the case. We haven't had the bearish crossover yet on the PPO. If you look very closely, it's yet to cross on the 60-minute. But as I mentioned yesterday, you can start going down in time to the shorter term time frames. We go down to a 30-minute chart. We do have a bearish cross. If you can't make it out in the lines, I put up a histogram here. When you use a MACD or a PPO, they're very similar, and you use their histogram. The histogram just represents the distance between the two lines, and so therefore, when it crosses from green to red, you have a bearish crossover. So on this 30-minute chart, which, as I said yesterday, when you get down to these shorter term time frames, you get the earlier buy and sell signals. However, they're also more prone to whipsaw signals, meaning false, breakdowns. Here's a few bearish crossovers that didn't really stick during an uptrend. This was an uptrend right here. Started from this point. You had a nice bullish crossover when the lines went green. In other words, the PPO lines cross. It defined this trend so far, and really. So this was also a false breakdown. So maybe a false breakdown, maybe not. However, I also have said this many times over. When you have very low volatility, whether it's a sideways range or an upwards range, but you don't have clean separation between the lines. And what I'm referring to is all of this right here. You can see, and that's also evidenced down below on the histogram by the peaks being very small. So what I like to look for are these mountains or hills, clean separation between the lines and the PPO, these clean peaks. Therefore, when you get those crossovers, they're much more reliable and clean signals than when you've been trending sideways or in a tight compressed range as we were at this point here. Where am I going with that? Well, this hill or separation isn't as big as these prior ones, but it is much bigger than what we had here. And I'm kind of mixed on this right now. We got the crossover. You can see the histogram going red, but the lines are really flattening out, and that's not ideal. Usually, when you see a crossover, that's it. That's the momentum has turned. You can see the histogram goes sharply lower. The lines make clear crosses. So right now, we're sort of flattening out. This can still go either way. As of now, at least by that one metric, we're on a sell signal there on the 30-minute chart. Again, overbought, but you can see that we've kind of tightened up. Our trading range has compressed now. Look at these candles compared to these candles in the past. Very small candles, very tight trading range. But I still favor that move down, and at most before a significant correction or pullback, and I'm talking 1 to 2% or more at most, I see a move up here at about that 170.79. That would also put in a right shoulder on that head and shoulders pattern. But we could have a early right shoulder right now, especially if we use that down sloping neckline. So let's just see what happens here. And of course, we should take a look at the S&P 500, or at least via the SPY. Similar story. I'm going back to a 60-minute chart here, and you note the high-level bearish PPO crossovers and the subsequent pullbacks that we had following those crossovers. High level meaning above the 0 line, the higher the better. This one is sort of flattening out, but again, if you can couple those with overbought or near overbought readings, which I've done here, you can see that it is a fairly effective. Nothing is perfect, and I made mention in the trading room, I think it was today, or on the front page, one of the two, that these sell signals come better. They work better and they play out for more downside during a downtrend than an uptrend. As I mentioned before, since April 2nd, the near-term trend has been bullish. So these can be burned through, but I still have a near-term downside bias. There's a gap. There's a gap right here. Let me add that line. Yesterday's gap to be backfilled on the SPY if it wants to backfill it. And all of these lines are resistance lines. What I'm really looking at are gaps. Gaps act as magnets. They work as very good support resistance levels. So we have a gap right here. Also, a lot of reactions as well from above on that line. That validates this level here, 2070.36. Are we above it? Yes, by a little bit, but not very much. We haven't. Normally, you take out a resistance level, you see impulsive buying. That's not the case here. So far we're above it. But if we drift back below today or tomorrow and fall back down, then I think there's a good chance that we come back in and backfill or test yesterday's gap at minimum before going higher. And again, if things happen to get ugly from there, and markets continue lower, you can have two alternative trend lines. I can draw one that way, and I can draw one here. So you want to watch these trend lines. If the latter of the two, this one down here, breaks, that means we've broken gap support. And more importantly, remember this inverse head and shoulders pattern I was talking about on the SPY and the especially the QQQ. You had a neckline right here. You had two shoulders, two left shoulders right there on the SPY. I had a right shoulder, floundered around, then it broke out. So these are the cross currents. This pattern, nor has the QQQ inverse head and shoulders 60-minute pattern played out to its measured target yet. The measured target being the distance from the farthest point from the head up to the neckline, and so that would carry us up, at least to my uppermost targets here. Same with QQQ. So these are the cross currents that we're looking at in the markets right now. There it is. I had that yellow line as, nope, I had back here. This was the neckline on the inverse head and shoulders QQQ. There it was. We broke out, we consolidated, flagged, moved sideways a little, and then boom, big impulsive move up. And you can see again, I already covered this before with these potential resistance levels here. So that looks to me as pretty formidable resistance on QQQ. It's certainly slowed down and has been testing that 167-ish level. If it pops above then and takes it out, then 169 would be my next target, and after that 170.79. Okay, now let's look at crude oil. Again, there may be a nice trade setting up there. I believe next trade will be on the short side. This is a 60-minute chart of CL crude futures showing you the divergent low that we had recently. One reason I held off on that, so far held off on that DWT, I think it is the inverse 3-time bearish crude ETN, or whatever your proxy is. If you want to trade crude futures or another ETO, non-leveraged, or ETF, I should say, non-leveraged ETF or ETN, you can certainly do that. And I'll go over a few of those here. But right now, what we're looking at is if crude can turn down here. So far today, it has, after making a punching out, making a new multi-week or multi-month high. But it's pulled back a little bit, and you can see some pretty steep negative divergence down here on the PPO. So we're just clinging to divergence on the RSI. We're certainly overbought on that RSI, well above the 80 level even, and this may start to play out for a correction. Now let's look at some other charts that'll help to confirm that. This is symbol XOIL .X on TC2000. This is the light sweet crude oil index. Don't pay any attention to the price being down. For whatever reason, every day the price is way off on this, and then they adjust it the next day or at the end of the day. And you'll see there's a little red candle down here. We're not down 28%. That's just how whatever this charting platform has a problem with. But the historical candles are correct. So therefore, you're looking at a nice bearish rising wedge, or at least an uptrend line, a very well-defined uptrend line, terminating in a rising wedge, or at least in a divergent high. You can see the negative divergence on the PPO and RSI here. So when this plays out, there'll be a little zigs and zags along the way, probably catch support there around 62 first, but I see us ultimately working our way down here to this level, this orange line. So maybe something along the lines of this. We just need to see some decent evidence of a reversal, and then move down there, possibly one last reaction, and then a move down here. Now to quantify it for you, measuring that out, that's about a drop of about 11%, and that's not a tradable index. So let's look at what you can trade if you like ETFs or ETNs. USO is one of the more liquid. You can see the same story here. Negative divergence on the PPO, negative divergence on the RSI as prices make a higher high today. We have a candle sitting way up there. Potential for a island top if we gap down tomorrow. Now that's, of course, this is US owned. This is showing you regular hour session trades 9:30 a.m. to 4 p.m. Futures trade around the clock, so you're not going to see the same type of an island top on there. But it is worth noting because sometimes these ETNs and ETFs get so big, it's a case of the tail wagging the dog. In other words, inflows and outflows, and that happens with GLD. There's so much money in gold. Even institutions, hedge funds, multi-billion-dollar funds trade GLD in lieu of gold futures in many cases. So by buying and selling the ETF GLD, or in this case USO, that has an impact on the futures, or it can, depending on how much money is being taken in and out of these. Another one is OIL. It's going to show you the same story. They must have got rid of OIL. Yeah, they must have changed the name. So let's just stick with USO for now. And finally, let's look at WTIC, light crude oil. This is, continuous contracts here. This is a 10-year weekly chart, and we'll have to scroll up here. I have some of the chart cut off. It's a little large for this screen. But what you can see, what stands out to me on this chart, again, 10 years, weekly candles, and we go back for the last decade, and we've only been overbought 3 times in the past decade. This is back in 2008 here. This is 2011. Looks like early 2011. You can see the year marks down. Oh, you can't see them on the video. Let me just scroll down here just below. There we go. All right, so there it is. Here's the years down below. So 2011, 2008, and now 2018. Those are the only 3 times in the past decade that crude oil has been overbought. I'm sorry, over the 70 level on the weekly time frame. And you can see what happened in the past. Not that this has to repeat, nor am I calling for such a drop. This was a crazy extended run. This was a significant correction within this sideways trading range, and now here we are. And the technicals confirm too. You have an uptrend line, you have this wedge type pattern here, so there could be considerable downside to come in crude, and we might come all the way back down here to about the 53, 54ish dollar per barrel range, maybe 55 or so, or at the very least come in and test this trend line again and then reverse. I had it cut off down at the bottom, but you can see I also have a PPO on this same chart. And, this is when we were bullish and long. The energy stocks back in early 16 had a lot of good trades on this initial rip on the long side. The crude was set up, and this is a big bottom. That's a big bullish divergent low. You had divergence on the RSI above. I moved it off the screen again. You had a trend line break and everything else. So, crude has been in a bull market since those lows. Pretty strong rally, pretty strong advance. But it seems to be that momentum seems to be waning right now. A little bit of divergence here forming. Again, you can even see it on the weekly chart. And now when I zoom down to a daily chart, this goes back to late 2014, so we're looking back a few years here. These are annotations I've put up on this chart over the years, and you can see there's a lot of things I'm looking for. Forget about the past boxes. Forget about these. I haven't updated this chart other than to just show you that we had a divergent high here, and that was pointed out at the time, and we had a correction. In fact, we had a heck of a correction, the biggest correction that we've had since going all the way back to early 2017. This was a big drop. And what did we do? Well, after that, we rallied on. We've just made a marginal new high, but that new high, just as that previous high was a divergent high, this is simply an extension of those negative divergence. You can see the RSI really dropping off here. I'll have to clear that out to scroll up and show you the PPO as well diverging. So you have this negative divergence as well in the daily time frame, and that's that smaller divergence I just showed you on the weekly chart. So if you don't care to trade crude oil, DWT, or any of the other short USO, you can also a proxy for trading crude oil, just like a proxy for trading gold is using GDX, the gold mining stocks. You can also trade crude oil indirectly via the energy stocks because they will respond to crude prices, obviously. And here's XLE up against resistance level. This isn't the most formidable resistance level. I can't even hardly see it on this chart. Let me turn the color up a little bit. 73.80-ish. We had some reactions back here, and that line actually probably goes to the left of the chart. I wouldn't have it there, but either way, this is a pretty strong and extended rip. We're now overbought. We just hit that 70 level on the RSI. Sometimes it's just a one and done. You hit it. Sometimes overbought can become more overbought. But either way, look at how steep this trend line is. And if we look at a 60-minute chart here, let's go down. Look at this board. Um, that's where you can draw another trend line here. And this might give you an early signal of a breakdown in the energy stocks, but I would only short the energy stocks if you can confirm it with a short on crude oil. If crude continues to rise, any breakdown here will probably just prove to be short-lived. Otherwise, we can move on down from here. Well, we'll see. We'll see how much this gets going. I think there's a potential for a longer term swing trade, but maybe a move down to at least a 70, 50-ish level, even just get a correction from this very steep advance that we've had. That's XLE. And by the way, the biggest component of XLE is XOM. And you can see that is actually at a pretty significant resistance level. You can see that level acted as support all the way back here. And then once that support, we had a little washout move there. But once that support was broken right here, we had an impulsive sell-off. We back tested and failed at that level again. So look for at least a reaction if and when ExxonMobil gets up to 70.90. And so far it's almost there. It's at 79.29 right now. Got as high as 79.48 today, so close enough. And again, this is being the big 800-pound gorilla in the room for the energy sector. You want to keep an eye on XOM if you're trading energy stocks. And the other ones, of course, are XES. This is the oil and gas equipment and services. We had this, inverse head and shoulders pattern right here that played out pretty nice. Left shoulder, head, right shoulder, they're all labeled there. Had a second right shoulder, and then boom, broke out, had a nice advance, and came back down. So now where are we at today? Let's see. I have a very significant resistance. If you look at all the reactions coming from the left of the chart, going back for years. Now, you might say, well, Randy, we've taken that level out today. We've done so, but we've done so in a very extended run. From my experience, when you expend so much energy just to get to a key resistance level and then break above it, you've used up most of your fuel. So at best case scenario, I see a back test of that level. Before it advances higher, going up probably to challenge these previous reaction lows. And at worst, this may prove to be a momentum fueled overshoot. That's a term I use when you have a lot of velocity or momentum, either in the, leading down to on a downside sell-off or an upside rally. This is a near vertical rally. And so what tends to happen is the momentum, that upside momentum, will carry a stock or a security or an index above a resistance level only briefly, just to see it settle back down on or below that level. So point being is I would not I would be very skeptical of this as a breakout because of that. I would much prefer, if I were bullish right now on the energy stocks, I would much prefer to see this come back in, maybe backfill today's gap, consolidate for a while, pull back, work off some of the overbought conditions, and then build up the energy to power for the next thrust up. So that's certainly a breakout that I would not be taking and that I'm very skeptical of. And here's the other big, one of the more popular energy ETFs, XOP, which is the oil and gas exploration and production ETF. And you can see there is resistance here. I do have a line right here. It's tuned down a little bit. And there's some reactions back here in 2016 that helped define that line, a couple reactions there, and we overshot it by just a hair there. So bottom line is XOP is also coming up on resistance. If it gets much above there and tries to challenge that previous reaction high right here, then you can see it will do so while also back testing this trend line right here. This is a pretty well-defined trend line there. So that's it. I see minimal upside on the energy stocks. I think the risk reward right now is skewed to the downside. I want to get the timing right on this one. It may be I may add some of these as active trades today, tomorrow, but most likely probably next week, depending on what happens. But again, if I don't get those, the pretty high confidence, a high degree of confidence, either via sell signals or something in the charts that convince me now is the time to pull the trigger on it. These are just setups for now. Just something I'm watching. They're not official trades, and nor am I engaged in this sector yet. Okay, I'm wrapping the video up with gold, and there's just really not much else to say about it. I continue to say here we are in these trading ranges, sideways trading ranges with the U.S. dollar, gold, silver. Trading ranges don't last forever, and once we get a breakout, we'll probably start trending one way or another. But until we do, there's just not much else I can say on gold. You trade gold or GDX right now, you're just going to, especially GDX, you're going to get chopped into pieces. GDX, the average daily range, the normal price swings on GDX, goes up or down, usually double digits. I'm sorry, not double digits, but well into the single digits. 2, 3, 4, and even 5% intraday swings are not unusual for GDX. So it's GDX is just waiting for gold and silver. You can see there's a pretty significant level I have right here. It's acted as support and resistance going back. And we're at the top of that range now. So objectively, do you want to buy them here? No. You want to wait for a convincing breakout, but I wouldn't take a breakout in GDX unless gold breaks out. Otherwise, GDX could come down and may continue to trade around within this sideways range right here, defined by, that upper blue line and the bottom, this level here. It should have been a blue line. All right, we'll wrap it up there. Anything else, like I said, other sectors, cannabis stocks, commodities, I'll do an update on. I just did an update on bonds yesterday. But right now, it's more about individual stocks. And there's a couple trade ideas I need to update, like CVS that hit a profit target, sugar that's been stopped out. I just haven't had time to put a front page post up on that, but I'll try to get to that soon. This has been Randy Finney with Right Side of the Chart. Hope you